All right, all right. Peace, 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 family. How is everyone doing on this fine and beautiful day? First, I would like to say I appreciate everyone's presence here with us on this fine day. And with you being here, would you please be able to hit that like, touch that subscribe, and hit that notification bell so you can be notified of all forthcoming content in the future? I truly appreciate your presence and it doesn't go unnoticed. All right. So, today we are going to be endeavoring into the topic of the importance of life insurance in our community. And I have the absolute honor of having my brother on this platform with us, who is a subject matter expert in this arena. And I am truly, truly honored and humbled that he is here to be able to explain and express some of the benefits that we can tap into concerning life insurance. So, y'all know I love my backstories, so let's get it. So, um, I met my brother back in college, MMW, playing cymbals. He was my mentor, he was my teacher. He guided me in so many different arenas, and I truly appreciate his work ethic then, his work ethic now. He is a phenomenal father, an amazing husband, a wonderful insurance person, and just an all around good dude. And I just truly appreciate him just being on this platform with us today. And I just would like to introduce my brother, Marcus Mastin. How are you, bro?
Hey, what's going on, sis? How you doing?
I am, you know what? I am divine. I can't complain one bit, not one bit. So, with that being said, tell us what you got going on, bro. What you do, what you into. Just let us know a little information about you.
Definitely, definitely. Well, thank you. First of all, thank you for having me. I appreciate it. Thanks for sharing your creative space with me. To being able to share good information to everyone, and just go into detail a little bit about what I do. So, first of all, I want to say thank you for giving me the opportunity to come on first. Thank you.
No worries.
Just a little bit what I've been doing. Recently, got into the insurance industry. I've actually worked in finance and banking for the last 7 years. Worked in different segments from retail banking, worked in fraud, worked in just different segments, management. But was looking for something a little bit more to just kind of come in contact with people in our community and really help them as far as with more detail with things that are going on personally in their life. And I decided a few months ago to pursue life insurance. I actually went and got licensed as a life insurance agent in the state of Alabama. And since that time, it's been, I mean, very rewarding. I've been able to, learn more, help many people learn things that's helped myself, and also just have a clear understanding of, kind of what's required financially. Just getting more in depth into what to do in certain situations because for us that are, we have families, we married, have kids, different things like that. Our finances are such an important, just segment of our lives. Really that's the foundation of everything is our, financial status. And we want to make sure that we're, making sound decisions, making sure our families are taken care of, and also just making sure we're, just knowledgeable of how to go on each day. So that's what I've been doing recently. Got licensed for the next few months, looking to go a little bit further, get licensed in the investments area as well. And so that way I can, just continue to educate more people, become more knowledgeable, and be able to give them more information. So that's what's been going on.
Absolutely. And I kid you not, he has been dropping gems for me that I can utilize. So I know if I'm receiving gems, I know that you guys can too. So just starting off, what is the main importance of life insurance and why should individuals in our community in particular, why should they endeavor into investing into life insurance?
Yes, definitely. So with life insurance, it's a very important part. Really that's the foundation of your financial household. With insurance, anytime you insure anything, you're transferring the risk of something happening. So that's really how we have to look at it.
Mm-hmm.
Anytime you insure something, like example, we buy a new cell phone. We're going to insure that phone because there's a possibility that you may drop it. we may break it. We may, drop it in water, hopefully not, but, may drop it. So, with us insuring that phone, that's having a plan in place to say, okay, if this gets damaged, I can get another phone. With life insurance, it's a little bit more, of course, a little bit more in depth. Of course, we're transferring the risk of something unfortunately happening to us that will unfortunately result in death. And with us when I say transfer the risk, that's when we purchase a policy. We pay, our payments or they're referred to as premiums. We pay those to the insurance company each month. And what that does, the insurance company, they have that policy in place. They're willing to accept that risk. You're paying into it. If anything happens, they're going to pay out the face amount, how much the policy is worth, to your designated beneficiary. So it's always important to have some form of insurance in place because unfortunately that's one of those tough conversations that we have to have. Sometimes it's good to have tough conversations because we should always have a plan in place if something was to unfortunately happen. We have plan A in place. We have plan B, and we're making sure everyone is properly protected. So definitely a very important um, something very important to have in every household.
Right, right. So I got another question. Why do you think that the individuals in our community in particular, why do you think that they shy away from getting life insurance?
I think with that, it's just I think a lot of people don't understand the importance of it, or really just kind of shy away from it, not really understanding how it works. Because when we think about insurance and having things like that in place, a lot of times we may shy away from it. That's just from really having like lack of knowledge, knowing how much it can benefit us, knowing how much it can really just be cause a difference for us.
Mhm.
Um, and then a lot of people look at it, they may say, hey, I don't need it. I don't see a reason, what I can do. Why would I have to pay into this and uh, you know, nothing happens? And the thing with insurance is, as the old saying goes, it's always good to have it and not need it versus, needing it and not having it.
Yeah.
So, and when we look at insurance, just an example, I actually helped a gentleman out. I did $100,000 policy for him. And he was a little hesitant about doing it, but I kind of gave him the benefits, let him know what was going on, and it was very affordable, $30 per month, right? So
Mhm.
$30 per month, and when we calculated that, I broke it down to him. I said, hey, what you can do, you're paying $30 each month for a policy, $30 a month over the course of 12 months. That's $360 a year.
Yeah.
I went a step further. I said, okay, that's $360 a year, and I did him a 30-year term policy. I said in 10 years, you would have paid $3,600 into this policy, right? I said, now get this. I said, you paid $3,600 into it. If something was to unfortunately happen, that insurance company, they're going to pay out $100,000. Only thing that you paid into is 3,600. But in turn, if something happens, that insurance policy is going to pay out $100,000. And so once he understood that concept, he was game. He's like, oh yeah, this is an investment that's worth it. This is something I can see that's going to help me. And it was just, it was crystal clear to him.
Mhm.
With him having a better understanding, he was set, ready to go, and I was able to get him set up.
Mhm.
Mm-hmm.
And you know what? Unfortunately, when something happened to our loved ones and they do transition, you see these GoFundMe's that just pop up, and then the GoFundMe will say, "What? Well, this is for support and burial expenses," and that's the primary indicator that shows that they didn't have a life insurance policy in place. And yeah, GoFundMe's are great, for supplemental income for those that are still here, so that they can continue to live their lives. But if you were to have that insurance policy in place, then it's almost like it's something that's fixed, that that will come to you, so you don't have to worry about the external money coming from this source that is kind of unknown. It's kind of a gamble because you don't know who's going to fund your GoFundMe in order for you to get the adequate resources that's needed, especially in such a sensitive time. So I do appreciate that information. So, with that being said, some people they may be interested in life insurance, but could you please provide some information pertaining to what is the biggest difference between term and a life insurance?
Okay. So with
Term is
term,
whole
whole
insurance.
life. Gotcha. Okay.
Mm-hmm.
Yes. So with term and whole life, those are both, those are both policies that, they're, I'm not going to talk, negative about one versus the other.
Mm-hmm.
They're both, good policies. I know me, a little bit backstory, me growing up with my parents, grandparents, they normally did have those whole life policies in place. And I know a lot of people do go towards the whole life policies. With those policies, they do accumulate, they accumulate cash value, which is a great thing. On the other hand, with term policies, those are more affordable, each month. So for someone, that's just starting out, really just trying to learning more about insurance, getting their finances in order, the term policies are more so geared towards affordable each month. And then you can also set those for a certain duration of time, whether it be a 20-year, a 30-year, a 35-year. Now, what a lot of companies are going towards, which is actually, it makes a lot of sense to me. They're teaching people how to purchase term, but invest the difference. And a lot of people may be like, why do that?
Mm-hmm.
With that whole life policy, it matures at the age of 100. Now, that cash value that's built up into that whole life policy, that cash value, the person, you can pull from it. You can, take a loan from it, from what you built up. But at that point, you're almost kind of like borrowing your own money.
Gotcha.
You borrow from the cash value that you built up in that whole life policy, and then in turn, you have to pay that back times interest. Um, at any point in time, let's say if someone has a $80,000 whole life policy, and
Okay.
let's say they something comes up, they have to pull 30,000 from it from their cash value. Now,
Okay.
if they would have passed away during that time, they still owe that 30,000. What happens is that 30,000 that they're owed, that's gonna come out that face amount first before they even pay the beneficiary.
Okay.
So it's gonna decrease it. So one, you pulling from your whole life from your cash value, you having to pay interest back on your own money, and then two, if you still have an outstanding balance on that loan, and unfortunately someone they do pass away, the insurance company, they're gonna get their money first. So you'll get that face amount, minus what's owed. Now, on the flip side, an alternative, which, of course, as things go on, innovation, things are changing. A lot of people are buying term and investing the difference. The reason being, when you purchase a term policy, each month is gonna be a little bit more affordable. It's a little bit more comfortable to pay, right?
Uh-huh.
With that difference that you can save each month, you can actually put that into an investment account. That investment account is going to give you a better return, much more better than the funds that you're earning with that cash value in that whole life policy.
Okay.
And then also, just in any event, if you were to outlive that, let's say you outlive that term, let's say you're 30, you get a 35-year term policy, and during that time also you have the investment account where you have funds and it's growing.
Mhm.
By the time that policy ends and you're 65, you may say, hey, I don't want to buy another policy. Guess what? Over that course of time, you built up enough in that investment account that's giving you a better return than that whole life policy would. You no longer have to pay for a policy because you properly invested over the last 35 years. You have funds available right there. And then also, on top of everything, it's a lot much more than you would have earned as far as that cash value in that whole life policy that you would have to borrow.
Okay. So
So,
I do have a little question for you. So at the end of the 35-year period, is there any way that that could be extended?
yes. So once that term ends, and it really depends. Of course, the younger you are in purchase insurance is always the better. But now, let's say if like myself, I in my 30s, I recently purchased a 35-year term policy. By the time my policy ends, I'll be in mid 70s. At that time, there are some things in place, but I'm probably at a stage in my life I might be like, hey, if I've done what I needed to do, I may not want to pay towards a policy no more, because if within that meantime I put into this investment account, and
Mm-hmm.
it's grown tremendously over the last 35 years. Now, if someone hasn't, they can. There are a lot of companies that do have options for, some of our older clients that may want to look into, purchasing a life insurance policy. At that age, that is an option. But if you've invested, I mean, you're pretty much set and you're good to go.
Mm-hmm.
Mhm.
So, with that investment account, are there any like any drawbacks? Say, for instance, will there be any early withdrawal fees if you wanted to like withdraw your money early from that investment account?
I know normally those do apply, to where they're taxed. But as far as it wouldn't be in the form of like a loan. You see what I'm saying? And then also with that, it's totally separate from your insurance policy. So it's not, that's not impacting your face amount in case if you pass away.
Mm-hmm.
That's not impacting that at all. Like if you have $150,000 policy and pass away, that's totally separate. Your
Gotcha.
beneficiary is still gonna get that 150,000. But of course, with those accounts and what we normally refer to speak with a licensed advisor, they
Mm-hmm.
normally go through the different things that someone does do, like an early withdrawal. Normally, it is taxed, but it's not a case to where you're pulling from it. It's impacting your face amount, and then you're having to pay back an amount that's times interest. So you wouldn't have to be borrowed money from yourself. You're just pulling your own money out.
Okay. So another question. So say an unfortunate event happened to where somebody passed away and then they were to get that insurance money. Is that insurance money taxed?
Mm-mm.
It's not taxed.
That benefit? Nope, it's not.
That's perfect. I want people to know that money is not taxed. So you don't have to report that as income to the IRS.
Right.
So I'll make sure that y'all like understand that. In
Mm-hmm.
conjunction with that, now he stated that there's two avenues here. You have an investment account and you have your life insurance that you're tapping into where you're paying that premium. But you also have, that investment account. So you have two, separate streams, you know what I'm saying, of this income that can potentially help you, can support you in these sensitive times when unfortunate events like this does happen. So this is something that's good for you to tap into, because when things like that occur in our life, it gets tough to try to navigate finances, to be completely honest, because you're grieving, you're trying to cope with that, you're trying to figure out various funeral arrangements and how things are going to go, and all the assets that's going on with your loved one who has passed away. And if you have the ability to create that peace of mind for yourself in that avenue of your finances with the life insurance and with the investment account, that can definitely help that situation. So allow your future self to thank you for what you're doing now. And as he stated, the younger that you invest into the policy, the better that it can be for you, because a lot of times when you get older, and I don't want to put nothing on nobody, but you develop ailments when you get older, so it gets a little tougher for you to be insured. So that's why I just want to create the space for these conversations so that we can be a lot more educated and enlightened. Like we stated previously, a lot of people, they shy away from life insurance because they're not properly educated. They don't know, they don't understand the benefits that are out there for them. So another question: how can we tap into life insurance as living benefits, like in the living state? How can we tap into that?
Okay, so with that, there are a lot of different, options available. So I'll give you, an example. Let's just say a family of five, they just purchased a house, right? They just bought a new home, $240,000. Now one cool benefit that that's out there is, again, it's a term policy, but it's what we have is like a decreasing term policy. So with that, let's say you purchase a home, you do a 30-year mortgage. So you have a 30-year mortgage over here, 240,000. What you can do you can purchase a life insurance policy, 30-year term, decreasing, and it'll be a decreasing term for 240,000. Now, with that decreasing term, what it does, that's just something in place to where if anything happens to, let's say, if anything happens to one of the husband or the wife, in most cases, if something happens to a spouse, that may be 50% of the household income that's going to be eliminated. With that decreasing term policy, how that works is over the course of time, it gradually decreases. So at year 30, it may be, or year one, it'll be 250,000. The next year, it may decrease a little bit more. Next year, it may decrease a little bit more. And what it's doing is lining up parallel with that mortgage that you have. So each year that mortgage is coming down, that insurance policy that you have in place is coming down right with it, right?
Okay.
But let's say somewhere along the line, let's say if something happens unexpectedly to the husband or the wife, you have that in place to actually, you can apply that and that's enough to pay off this house. So that way, hey, I'm financially equipped. With me losing 50% of my income, I have funds now. I could pay this house off with this decreasing term policy. Of course, with those, it's kind of good to maybe, still, have enough. But those are normally policies that are put in place for like a specific purpose. So that's like one specifically for your home. Of course, you can still have one on the side for funeral expenses and also just be able to stay afloat for a while you're grieving, while you may not be able to work, different things like that. But there are policies out there that are like that. That specifically people get all the time just to say, hey, I just want to have enough to, if I have this mortgage over here, it's going down with it each month. And by the time I pay this house off, that policy is over. We're good. But the good thing about it is they have a peace of mind because they know they have a plan in place to, in case if anything does happen, hey, this is enough to pay off this $250,000 house that we purchased. If unfortunately someone passes, it's not a burden to where they may not be able to afford the mortgage or may have to relocate or, kind of uproot. So those are some of the things that, just one of the many examples, just with life insurance, it can be used for more than, initially we look at it like, okay, this is for funeral expenses. That's normally how we look at it.
Right.
But it could be used, for so much more. Like we were saying earlier, if someone does, lose a loved one, that itself, that's a lot. That's a process that person really has to go through. They need time to properly grieve. They have a lot of, logistics, a lot of things to work out and to put in place. They may be in a place to where, they may not be ready to go back to work immediately, or they may have exhausted paid time off or paid leave with having a policy in place to where it benefits and it's enough to pay burial costs, but take care of your loved ones as well. That can give them enough time to properly grieve, get their mental state, intact as well, and just be able to live comfortably.
Right.
Mm-hmm.
That's very true because the term isn't it FMLA that they could utilize while they at work,
Right.
that paid time off, but during that unpaid time off. And during that time, that is where the life insurance can definitely come and be that supplemental income within that time frame. As you said, to give you that space for you to figure out the logistics of life, period.
Right.
Because it's going to be absolutely necessary during that time.
Yeah.
Wow, that's very profound.
And it's definitely it's a big adjustment. I mean, I can imagine losing my better half. I know it's going to take time. And that's it's just so much more than having enough to bury someone. It's like, hey, this is a lot to just for me to be able to properly function or just to get back in routine. That takes time, and most employers, they may allow time for bereavement. They may depend on where you are with paid time off. It could turn into an issue to where, okay, you can take leave, but it's unpaid, and that's going to create more of a really like a mental strain on you because now you need time to properly grieve. You need time to be able to really rehabilitate. But
Correct.
you're worried about bills at this point and trying to hurry up and go back to work. But it's hard for you to even focus. So that's one of the things. When we set up policies and we do a review and analyze everything. We look at, okay, how many kids do you have? Are you married? We look at things like that. Do you own a home? And that really helps us to determine how much coverage someone really needs. Because for someone that's married
Mhm.
or has a family, we wouldn't want to say, hey, we're just gonna get you enough to for your funeral expenses. We of course that's an important part, but it's just so much more. And anybody, every day we work hard and we want to make sure we provide for our families, while we're living. It's even
Absolutely.
more important to put a plan in place in case something happens to you where you're no longer living. So that way, it's peace of mind knowing that if anything happens to me, they're taken care of. They're
Mhm.
gonna have time to adjust and get back into their routine, and finances won't be an issue at all.
Mhm. Absolutely. So I have a question for those that are older and haven't tapped into the life insurance arena yet, and they want to, but they may have like extenuating illnesses that they may have accumulated over life. Do they still have the capability of tapping into life insurance?
With I know there are a lot of companies that have different things in place, for our seniors.
Hmm.
And it really just it depends on the level of severity with the illness. So depending, it just really depends on how severe it is. In a lot of cases, if it is something life threatening, they may, unfortunately, may not be insurable. But if it is, some maybe, past medical history where they may have, you know, uh, previous, surgeries or different things like that, that could be a possibility. But at that point, it is a risk for the insurance company.
Hmm.
So that premium amount per month, it may be a little bit higher. Maybe a little bit higher, for them to pay, and that's just simply because the insurance company at this point they're taking the risk at insuring them. So that's why normally I tell people, hey, while you're young, definitely go ahead and get a policy, put a policy in place because as you grow older, as things happen, you just never know, and really the time is important because one week you could be fine, the next week there could be something going on health wise, medical wise, but at this point you're not insurable, so it's always best to get it, sooner than later. I know we are speaking earlier before we got on. We were just saying how affordable it is, and we actually compared it to monthly subscriptions on streaming services. Like Netflix is $15 a month. HBO Max is probably like another 12. For our gamers, Xbox, that's probably like another $15. You look at things like that, you're paying $45 a month for streaming services for that amount or less. That's enough to insure you, give you a peace of mind, make sure you're properly protected. You can have an insurance policy in place, for 30 to 35 years, and it's very doable.
Right.
And so when we break it down like that and just explain the simplicity of it, it really helps a lot of people to see this is doable. So
Right. Right. So I got another question for you. So for those that are in the military and they automatically they get the term life insurance, do you recommend that they go out and get whole life insurance as well? And if so, why?
with it, now what I recommend, I know with military they normally do the SGLI.
Hmm.
What I would recommend there, I would recommend a term policy along with that. And that's just in any case, just depending on, I know once service normally ends, that's when that coverage ends as well.
Hmm.
And, with that, what I normally would tell, would recommend in this situation, I would recommend them get that term because they have I think it's 400,000 SGLI. They have the 400,000 in place, and it's just like with anybody who has insurance through their job as well. We recommend this for people who have insurance through their job. It's always good to have additional coverage, because at any moment you may decide to leave that job. Just like the person in the military, they may decide to not reenlist. They may decide to just no longer pursue that, and so they're going to lose that coverage. But if they do have additional coverage and have some things in place, what I would say, hey, true enough, you do have this. Let's set you up with a policy on the side and additional coverage, and then two, with term, again, it's very affordable. It's not It's not a thing to where it would, really impact you. Of course, the more coverage you receive and the older you are, the premiums are a little higher each month for what you're paying. But if you're a young person, you're mid 20s, you honestly won't even see that. You won't see that monthly payment each month.
Hmm.
So especially if you're in the military, you have that 400,000 plus additional amount that you can have that you can always have in place, and it's just good to always have a backup policy because you never know when you may leave that job. You never know, anything, especially in the employment industry, anything can happen. Layoffs happen all the time,
For sure.
unfortunately. So I hate someone to get laid off. That's the only source of, you know, um, insurance that they have. At that point, once you separate from that employer, that coverage at that rate, it ends. You
Oh,
may be able to put it into something else, but it may be a little bit higher. Or depending on your health status at the time,
mhm.
it just varies. And so it's always good to have additional coverage in place outside of the employer, and then also for my military guys too. It's good to have additional coverage outside the military as well.
And then, in conjunction with that, for those who are in the military or who are older or who have like extenuating disabilities or whatever so may be the case, don't forget that you can do an investment account as well
Hmm.
with
Right,
whomever, you
right,
know. So
correct.
if you don't have the capabilities of being able to tap into life insurance, just know that you can invest. Investments is very important. So I just wanted to stress that factor so people don't feel like,
Yeah,
it's a lost hope for them for whatever they got going on, because you can still, have a means of income, just utilize it in a different fashion or a different stream. So,
right, right. Especially if it's affordable, that's always an option. We can, they can always get with a licensed representative, licensed financial advisor, and with that account that they set up, the same kind of similar with an insurance policy or even with a regular standard checking or savings, they can always designate a beneficiary on that as well. So that way, in the event of death, they have somebody that's designated. There's somebody in place to say, okay, I have access to these funds.
mhm,
If something happens to you, we have it. And then, also with those, your money is growing. So that's a great option, um,
mhm,
too. And really, and with those, the best way really to do them, of course, if it's affordable and feasible, is to do them simultaneously. Like how we're discussing the term policies with them being very affordable.
mhm,
You know, uh, you can talk to an advisor and say, "Hey, I want to look into this. I want to get this set up. Let me be growing some funds over here. I have this policy in place to cover me in case, of course, in the event of death, but I also have this over here to the side. So that way, let's say if I outlive my 30-year term policy, by this time I'm up in age, I'm a little bit older. Uh, my health status may have possibly changed, maybe. So at that time, for me to try to get back insured, it may be more or I may not be insurable. But the good thing is, during that duration of time, I've been putting money into an interest bearing account where I can where it's been growing, where it's there. If I have somebody designated as a beneficiary, hopefully at that stage of my life, I don't have to worry about even paying insurance anymore.
right.
So I'm set. So that's why with insurance and different things, normally you talk to insurance representative, insurance agent, and they're also licensed. It's I mean it's you get a 2 for 1 because they're very very knowledgeable and can go over a lot of things with you, to just where it really makes sense and breaks down. And there's so many light bulb moments that I click on in that conversation.
Hmm.
Initially before I got into the insurance industry, I was under the assumption of paying insurance, paying it forever. I'm like, hey, I'm just gonna pay it. I said this policy ends, I'm gonna do this, or if the term ends, I'm gonna look into getting something else. But if you really took time to kind of have your financial ducks in a row and looked into different things, got educated on some things that are including insurance and those, looking into speaking with a licensed advisor for investments. By the time that insurance policy ends, I mean, you should be squared away. You wouldn't need anything else.
Right.
Mm-hmm.
Okay. So I got another question for you. For those that does have an investment account and say that the loved one passed away, but the beneficiary is now entitled to those funds, would they be able to continue that same account themselves? Would it be able to roll over to them if they wanted to, do that for themselves? Is that a possibility?
Now with those, they may actually have to put that into something on their own to where they're kind of change their ownership. And so
Okay.
with that, they would normally I would have they would have to not licensed yet,
Mhm.
but normally they would have to have to speak with an advisor. And normally with those, if there's not an option to to do so, they can establish their own.
Okay. All
They
right.
can do that for, or on the flip side, that may be funds that they're using to actually pay funeral expenses, or to have to live, because they have that in place instead of that insurance policy that may have ended. So they actually may need those funds. They may prefer, honestly, to get a check first,
Yeah.
to cover expenses, to cover, everyday living, maybe, clear up some things, and then from there, more than likely they'll look into, doing something on their own and establishing some things, and with that they can go, right back to their advisor and do that.
Okay. Do you have anything that you want to leave us with before we wrap it up?
Yes. So just with insurance, one thing I do recommend is, just with everyone, if you do have children, you can add your children on as riders on your policies, and with that, that allows them to, of course, be insured. Unfortunately, there are, sometimes with social media, I may see that a young child's passed away, and then I'll see a GoFundMe for this young child, and so even with your kids, you definitely want to have something in place and make sure that they're properly protected as well.
Mhm.
With they're very affordable. Very affordable policies each month, and then also once they become of age, because with those, that normally, if they're on as a child rider on an existing policy, that covers them up until age 25.
Okay.
So I mean, of course, you have to have that in place before they turn 18, but they could be on there as a rider till 25, and then at that time it's easy to actually convert them over to a permanent policy.
Mhm.
And when you convert them over, when they've been on as a rider, you convert them over to a permanent policy. They're almost guaranteed insurable.
Mhm.
By that time they're 25. Again, is very affordable. So they've been covered from age 0 to 25. They turn 25. Go ahead and they can go ahead and set up a policy. Paying 20 to $30 a month to insure themselves for the next 35 years while they're young, and I mean, and they're covered. So that's definitely, it's never too young to get life insurance. And once that social security number generates,
Mhm.
get it for them.
Okay.
Definitely sign them up. Don't hesitate. Because
Mhm.
you do want to have, you want to make sure they're protected and covered as well.
Wow, this has been really eye opening. I have gotten so much information that I can utilize and pass forward. I'm also going to drop all of Marcus's information down into the description box below so everybody can get in contact with him, get further information, and then just get signed up for life insurance. So I hope everyone has definitely, definitely understand the concept of the importance of life insurance for you and your family and how it can help in the long run. Like allow your future self to just thank you for all the investments that you're endeavoring in right now because it's truly important for us to act right now. And as he stated, act now while you're young, while you still have it fresh on your mind. So when you get older, it won't be so much that you have to work out. So just please get these things in place whenever that you can. This is it's no pressure. Do your research and things of that nature, but you can get with a licensed agent and they can better inform you so that you can further make an informed decision of what is best for you and your family and how it can help you guys for now and in the future while you're living, or if something were to happen to your family, you're secured and insured. Bro, I truly appreciate your knowledge, your expertise, your intelligence, and who you are as a person. I truly appreciate and I truly honor that. Thank you. Thank you so much.
Hey, thank you. I appreciate it. Thank you as well. I
Yeah,
appreciate you.
no worries at all. Thank everybody for coming out to the platform of KSheaO. You know, my name is Keita. Tomorrow we'll be having another dynamic guest. Her name is Kamiko Ray, and she's definitely going to come on here and talk about who she is, how she has developed, and her successes in her life. So please stay tuned in. Be sure to have a wonderful rest of y'all day, and y'all take care of yourselves and take care of those that you love the most. All right? Peace.